Next panel is very interesting because we're talking about these new models for VCs, and I want to introduce you to one of the person that I really appreciate the most in our industry, because he is really traveling so much and he's talking with all the startups possible that you can even imagine. And obviously he writes for TechCrunch. And so again, big welcome, because this guy really deserves it for all the contribution that he's giving to countries that are not so under the radar, and he writes about the startups, and he try to find the right stories. So he really is giving so much to our ecosystem. And we have here Mike Butcher. I go to find him, Mike. All right, here we are. Mike, come here with me 1 second.
Hi. We haven't got a panel yet.
But it's coming. The panel is coming.
Okay.
Okay.
We have chairs. Hello, everyone. How are you? All right?
Let's give Mike a warm welcome. Seriously, I mean.
Fantastic.
Can I ask you one thing, Mike?
Yes.
I'm just curious about. While, guys, if you can give us a little bit of chairs, and panelists are arriving.
One of my panelists is in the audience, I believe.
Okay?
Yes, there he is.
Sure. All right.
Apparently, yes.
One is here, one is coming.
Right.
And I go to find your chair, okay? I'll ask you my question later.
Hi, everyone. Okay, here's a quick question. How many people here are entrepreneurs in startups? Put your hand up. Okay, keep your hand up if you are raising money right now. Okay, right. Let's see, over here. Right, what's the name of your startup? Come here. What's the name of your startup?
This is Ticket Club Comier. We sell tickets online for the events, and we are doing this very good.
Online ticketing, right. And you're raising money. How much do you want to raise?
$51,000 for...
Really? That's not much?
Yes? Yes?
51,000? Dude, triple that one. Triple that one. Oh, there's Mr. Godowski. Hello, sir. Put your hand, you got raising money? Put your hand up. Okay, he's raising money. Okay, you got some. You guys sit down. I'll be with you in a second. Right, where's over here? Come over here then, sir. Right, what's your name? What's your name? Your company?
My name is Dmitry. I'm CEO and co-founder of Presentane.
Presentee.
Yep.
What does that do?
Well, that's a software platform for conducting presentations, doing interaction with the audience, recording and publishing the content.
It's like a sort of SlideShare with video and audio.
You can call it that, yeah.
Okay, how much money do you want to raise?
Well, we raised 200,000. We're looking for 300,000 more.
Right. Okay, and this is to scale in this part of the world or globally? Where?
You mean raising where, or?
No. Where do you want to launch? International?
We launch in Europe, and we have distribution channels in Taiwan and Asian countries. So trying to expand into US a little bit. So yeah, just starting.
Interesting. I'll have to get your card later. Right. Who's here's got a startup then? Who's got a mobile app startup? Mobile apps. Who's got mobile apps company? No mobile apps? Where are the mobile apps? Oh, there you are. Right. Right. What's your name?
Well, Julia.
Julia. Right. What's the name of the company?
Well, the name of startup or of the company?
The startup.
Well, it's Cognance. I'm a representative of Cognance. We're helping the early stage companies, like startups, to build their products. So,
so you don't have an app.
I have my own. So
Go on, what is it then?
it's called Uhot, and
Uhot.
It's called Uhot, but this is for Russian and Ukrainian markets so far. And this is for women who are really working all the time and they need to keep track of their schedules. And all the time we mix our schedules of our women's things with all of the business things on our calendar. And my startup is all about the calendar for women's stuff.
Really? It's just a calendar just for women? Can men use it?
I don't know, maybe later.
Is it in English or just in?
It's in English, and then we're planning Spanish, German, but so far it's English and Russian.
I want to try this out. This might actually, I might be able to use this as well. Go on then, what are you doing?
Hello, my name is Dmitry. We are doing the online marketplace, car sharing marketplace, peer-to-peer.
What's it called?
IB car.
IB car.
IWY car.
IWY car. Like blah blah car, that kind of thing. Cool, excellent. Thanks very much, guys. Thank you very much for entertaining a little opportunity to have a chat with the audience. Let's see what's going on here. So basically what we've got here is do we have all of our panelists here? Do you guys want to come up? You got one more? Are we waiting? We're waiting for one more. We can start with presentations, yes? So basically what we've got here is a bunch of investors, and we will be able to talk about... hi, how are you, man?
Hey, Mike.
There you go. We'll talk about what they're interested in, what they're investing in. Perhaps they might be interested in investing in you guys, who knows? Has everybody got a mic? Have you got a microphone you're sharing? We're going to sharing mics, okay. And we'll just have a quick presentation from whoever is here, to these guys, to tell you what they're up to. I don't think have we got Sunstone here today? Is Sunstone? Yeah, of course you are. I keep forgetting. He left. He's joined Sunstone. So, okay, let's kick off with you then, Max, and just do a quick say hello. Right. Tell us about this. Have you got slides?
Yeah, they told me to make slides. I don't know. Privet, Kiev. Hi. Good to see you.
This is Max Niederhofer, everyone.
So, Sunstone Capital, very briefly, is a... do we have a clicker? There we go. Honestly, I don't know why they made me make slides.
Hold it quite close to the...
All right, here we go. There we go. So, we're an early-stage venture capital firm based in Copenhagen, Denmark. The name comes from this thing called a sunstone, Solarstein in Icelandic, which helped the old Vikings navigate the seas when it was overcast, because you can tell where the sun is, and so you know which way is the right way to go. Anyway, all right. What we are is relatively young, founded in 2007. We have 4 investing partners, of which I am one. Our last fund is $110 million in size. In total, we managed around $900 million in committed capital. We focus on what I would call the Series A crunch in Europe, which is between $500K and $5 million. So very traditional early stage venture capital. And yes, younger, stronger, faster, and so on. So collectively as a group, we've had investments in companies like Last.fm, with a Series A investor in Prezi, where Accel is a Series B investor. I'm invested in Skimlinks. We sold Podio to Citrix. What else is on there? Oh yeah, we're in stuff like One Fine Stay and Neo4j, the graph database. And so that's us, right?
Thank you very much, Max Niederhofer from Sunstone Capital. Next up we have Philippe from Accel. Accel Partners, many of you know, is one of the top, certainly amongst, I would say, the top 5 venture capitalists in Europe right now. And perhaps you'd like to just do a little explanation about what you guys are doing at the moment.
Sure. So good afternoon, everyone. My name is Philippe Botteri, and I'm with Accel Partners, based in the London office. So just a quick note on my background. I started my career with McKinsey and Company, stayed there for a bit less than 10 years, half of the time in Europe, the other half in the Valley. Then I worked 5 years based in Menlo Park for a company, another venture firm called Bessemer Venture Partners, and I joined Accel about a bit less than 3 years ago now, and I've been focusing on software and internet investment, and you can see on this slide some of the companies I've invested in, including BlaBlaCar, which I'm glad was mentioned, Housedrape, DocuSign, CrowdStrike, and a few others. So our firm was founded about 30 years ago in the Valley. We have around 9 billion of assets under management. We have made about a bit more than 400 investments, and including 250 successful exits, both M&A and IPO. And in terms of the global coverage of the firm, we have established a presence both in North America, Europe, India, and China as well. I mean, we quickly realized that if we wanted to work and help build global leaders, we needed to be a global company. So we're doing both early stage and late stage investments. So we would do a seed as little as $500,000 and can do growth equity investment up to $50 to $100 million. And the key areas we are investing in include software and cloud services, gaming, mobile, social, what we call next generation marketplaces, as well as emerging geographies. And we have made several investments in Eastern Europe in particular with companies like Avito, Kupi VIP, or Prezi, which I think their CEO is also speaking today. So in terms of how we help our portfolio, I mean, the good thing about the firm is we have a global coverage, and whoever the office, it doesn't matter which office is leading the investment, you get access to the global Accel network. And we can help in terms of recruiting the right talent, help you expand in other geography. And for Eastern European companies, I think it's very important to have someone who can help them cross the ocean and set up a presence, in particular in North America. Then we help with partnership, expertise in sales and marketing, and help optimize exit. Thank you.
Thanks very much, Philippe. And next up, Marcin, perhaps you'd like to just give everyone a little quick taster of what you're doing at the moment.
Sure, absolutely. So, Intel Capital, we are a venture capital and private equity arm of Intel. And as such, we believe we are one of the largest technology-focused venture capital investors globally. So far, we invested over $11 billion. So every year, we are investing between $400 and $500 million in roughly 100 projects. We invested so far in more than 55 countries, and we invested in roughly 1,200 companies over the last 20 years. Actually, we have incredibly solid track record with more than 200 IPOs, and if I remember correctly, 300 to 400 strategic sales. In terms of the reason, I think that some people may ask why Intel decided to become venture investor. The reason is very simple. Intel operates in a horizontal market. We don't have our own vertical like Apple or like Sony. And as part of the horizontal market, we need to, number one, our fate is depending on the fate of the entire ecosystem we are in. And we have to be for us it's holy not to compete against our own customers. So basically, for us, the only way to grow is to grow with the ecosystem we are part of. And our ecosystem is basically new economy. So Intel Capital's objective is to invest in order to facilitate development of entire ecosystem, rather than competing for and increasing our market share in our market. So technically what we are doing, Intel Capital is a tool that is making the cake bigger for everyone rather than competing for the existing piece. So as a consequence of that, we are investing into anything that one way or another is increasing demand for processing power, either in consumer space or in enterprise space. We have very, very solid track record in Central Eastern Europe. So we started investing in Central Eastern Europe 15 years ago in Poland, Czech Republic, Hungary, and actually 10 years ago we completed our first investment in Russia, and it was Yandex, and over those 10-15 years we made a number of very successful investments, including AVG, MOL CZ, LogMeIn, Parallels, Ozon, Kupi VIP, and a number of other companies. For us, it is incredibly important to add value as investor. So frankly speaking, we believe that it is responsibility for any investor in a non-public company to add value. And fortunately, we have Intel standing behind us, so we can even say that basically our portfolio companies get access to support from 100,000 Intel employees globally. And there's no one template that we follow. In each case, the engagement we have with our portfolio companies depends on what the company needs, our expertise and resources in this particular area, but typically it covers marketing support, technological support. We often help companies to optimize their solution. One area that works particularly well is helping our portfolio companies to grow internationally. Intel has an office pretty much in every country on the planet, and we have relationships with the most relevant players in technology segment. So we can, in a very effective way, open doors to potential customers and potential
Have you got many more slides?
No, I'm going to stop here.
Okay, cool. Because I think it'd be good if let's just have a bit of a discussion now. So you heard from the audience earlier, just the kind of a taster of what the kinds of levels of cash that people are looking for. We heard 50,000. I think was it dollars or euros? Anyway, 50,000. It's probably the same thing. No, not the same. No, not local. Probably dollars. 300,000. I mean, this is relatively, in investment terms, it's a relatively small amount, right? So, I mean, for instance, let's turn to you first, Philippe. What's your view about that? I mean, how low can you go, as it were, as an investor of the level of investor that Accel is? What's the smallest amount you could invest in a company conceivably?
I mean, historically, probably the smallest investment we have made was probably in the $100,000 or $150,000. So we can go pretty low. I don't think the size is really what matters. I think.
Could you go to 50? That's not. Surely you wouldn't do that.
Well, but I don't know. A company would need 50 because if the company needs 50, I would probably say, well, they could do well with 100 or 150, right?
They could do better.
Yeah. Well, yes, and when we invest in a company, we want to make sure that they are well equipped to get to the next stage, of their life. And personally, I'm not sure that $50,000 is going to be enough to put the company up to the next stage that we are looking for. So I think in this case, we would sit down with the company, and if this is a good fit for what we're looking for, we'll probably revisit that number up.
What about you, Marcin? Would Intel Capital put $50,000 into a startup?
We are stage agnostic, but and we are incredibly flexible. So we can go very low, we can go very high, but probably 50,000 would be too low. So we don't have.
Marcin, just can you just push your chair back? There we go. You're good. Martin, there we go. We've just got managed to get our fourth and final panelist. Carry on.
So there's no limit that is set in stone. So I would say that the smallest investment we've done in the region was 500,000, and I can imagine cases in which we can go lower. So we have in terms of stage, in terms of size of the deal, we are fully flexible. But in practice, probably $500,000, and is the minimum we've done so far. And 50,000 probably, I would assume, that one problem that we would have is the impact. Yeah, we are trying to help the ecosystem to develop faster, and the natural question is can 50,000 investment make a difference? If there is a good story, we would consider.
Cool. Martin, we started a little earlier than I was told, so we kind of pulled a fast one on you. But you've got some slides, apparently. You can show us a little bit about Holdsprings. Do you want? There's a clicker just there.
Okay.
There's the clicker is on the table.
Yeah, I see it.
So
I know
you can show us a little bit about you.
Okay, so sorry for being late.
No, you're on time. We were early.
So I'm Martin. I'm a general partner at Holdspring Ventures. Holdspring Ventures started around in the year 2000 to invest in early stage consumer internet companies. For the first 9 years, we were sponsored by just one corporate, which is a publishing house. And then in 2010, we decided, together with the owner, with the publisher, to open it up for third-party investors. But the reason for this was not, like in many of these cases, that the funds were not doing good, the corporate venture funds. It was more that we saw an opportunity just to lift the companies to another level, to make them bigger, to scale nationally and internationally faster. And this is why we took then institutional money on board. And in 2012, we set up then the next fund. So we have around 120 investments that we did with the same team for over a decade. So it's a pretty consistent team. We were able to really build what was not easy in the beginning, in the early years, really big companies now that matter on a more national but also international scale. And we always stayed pretty fixed to our strategy, which is consumer internet, so e-commerce, market.
Hello, Mr. AV guys. Could we get the slides up? Guys, can we put the slides up here so people can see? Thank you. Sorry about whistling.
It's fine. So the typical consumer internet stuff, e-commerce, marketplaces, gaming, some of the companies you see on the left side. And I think the main thing what is a little bit different with us is that next to backing entrepreneurs, we initiate foundations of companies. So this is maybe once per year. So we do about one investment per month and one per year. We initiate the foundation of this. We assemble the team, and there we have got a much more, say, co-entrepreneurial approach rather than just the typical checkbook writing.
Great. Let me ask you the question then. How low would you go with your check writing? Would you do 50,000, 100,000?
I think the lowest one we ever did was 100,000, but this was 2006 Web 2.0 time. So today I would say 500,000 is a good number. And then we initially go maybe, let's say the average is about 1 million euro. And in special cases where we know the teams or the themes pretty well, we go to a 2.5 million initial investment. And then we scale that up to 10-15% of the fund.
Right, thanks. Hey, Mr. AV guys, do we got one more mic? Can we have one more mic at all? Have you stretch the budget? Yeah, let's get one of those. You want to bring one of those up? If we could pass the mic down here then. Yeah, you can give me that one if you like. If you give me that one, and I'll use this one. Max, I want to ask you the same question.
I think it's a very boring question, right? I mean, are we discussing whether we would invest 25 or 50K in a local company here? I mean, listen. Anyone who's running a fund that's like $100 million plus. We'll do seed investments if it's with the right group of investors, if it's in the right type of entrepreneur, because they want to buy themselves as an option to do your Series A. That's the only reason why, and I actually don't want to speak for these guys. It's the only reason why I would do a seed investment, right? And I think it's fair enough. It's great. Now, you as an entrepreneur, there's like tons of other stuff to consider, which are more interesting questions to think about. Like, should you take seed financing from an institutional investor, right? Should you take seed financing from an international institutional investor who is not committed to your local geography, right? Yeah. So the answer is yes, but it's much more complicated than that.
You're absolutely right, and I think that's one of the things that you guys probably agree that when you're going with the institutional investors, you're not just talking about the money, you're talking about what network they've got, how they can help you scale internationally. I mean, a lot of Holdsprings investments tend to be more in the Dutch, German, Austria, Switzerland region, correct? But what have you done that's been more, have you done any investments in this part of the world, in Ukraine, Russia? or Central Europe?
So we, in general, our home turf is German-speaking countries, and then we follow, let's say, the teams or the themes. So our first investment in this region was Ozon in 2006. The reason there was because we had exposure to the same business model in Germany and the Netherlands, and so we thought, because of this experience, it may make sense to let us in as investor. And then the other pretty prominent example is that we have set up La Moda here, which is more or less a sister company to what is Zalando doing in Western Europe. So it's fashion e-commerce.
Let's change the subject now slightly. In the UK, for instance, there's been sort of new laws about seed investment and something called SEIS, Special Entrepreneurial Investment Schemes, to make investing more tax efficient for angels. And now, of course, we have crowdfunding. So, people are doing things like Kickstarter, and there's a company called Seeders in the UK, which does crowd equity. Now, what's your as institutional investors? I mean, what's your view about this new movement that's coming up from the ground? To make sort of seed stage investing more attractive and more flexible, and are institutional investors going to be interested in this? Are they, is it a problem? Do you think in the future? Do you think? What's your view, Philippe? Let's ask you first.
Well, I think it's great.
You think it's a good thing?
I think it's a great thing for the ecosystem. So just to echo on what you're saying, I think there are two different things. There's a tax incentives for individuals, and then there's the crowdfunding. So let me address the two differently. So the tax incentives are great in the UK. So it means basically that you can invest in a startup up to 100,000 or 150,000 pounds. And basically it's for free because you get all the money back, basically in tax rebates. So the investment is free, so it's a great incentive for everyone who has 100 or 150,000 pounds to invest. They would choose that scheme, and that's basically fostering the innovation. And other countries are doing this. France, in the same extent, has a tax law that favors early stage investments. So I think all this favors the ecosystem, encourage people to take risks with their investments. Make risky investments without taking any risk, and that's the ecosystem. On the other side, you have the crowdfunding. I think crowdfunding solves another problem, which is if you have 100,000 pounds, you want to invest them, but you don't know where because you're not well plugged into the ecosystem, and so you want to have visibility in that ecosystem. And what crowdfunding does, it provides a platform where actually you can find the companies, see what they're doing, get more information, and make an informed investment decision about them. So I think there is an education role that is great. It makes people aware of what's happening, and it facilitates the investment. So I think the combination of both is terrific.
So you think it's good. Marcin, what's Intel's view about these new forms of early stage financing, like crowdfunding?
Couple of comments. So number one, generally in most places, there is not enough funding available to early stage companies. And I would say that probably, ironically, those schemes are being introduced in countries where there are already plenty of options available to early stage companies. I wish something similar was being introduced here in Central Eastern Europe and other emerging markets where shortage of capital is a big issue. Another element that is important is that, in many places, I think that, not necessarily for startups, but in many places, even for startups, there's plenty of money available. There are many places where there's plenty of money, but not enough investors. We need to remember that, getting investor is not only getting money. Every startup needs to remember that what really matters is to get someone who's going to help me to maximize the value of the company in mid to long term and achieve a successful exit. Getting just money is solving one problem, but in my opinion is by far not sufficient. And as early stage company, I would look for value add, not just money. And finally, the new model. I think that the venture capital business is being disrupted to the same extent. Any other segment of technology market is being disrupted. So velocity has increased everywhere. So basically, if you take a look at any segment of technology market, take a look at phones. Samsung is introducing new generation of phones basically every 9 months. So basically, in today's globalized world, fast beats perfect. It's necessary to be very fast in this market, including being fast in raising money. So basically, if the company is able to, if an elephant company like Samsung or many other technology companies is able to introduce new generation of products in a couple of months, in 6 to 9 months, there's no reason why raising a VC round should be taking as long. So basically, ability to raise money fast is becoming incredibly important. I think that the old good times for VCs, where it was possible to take your time and do the round for 6 to 12 months, are over. I think VCs need to adjust and be ready to increase their velocity and act faster. And I believe that to a large extent, it's already happening.
One of the problems, though, is that there's perhaps not enough competition amongst VCs in Europe, which has meant that they've actually, they quite happily not make decisions very quickly. I mean, one of the complaints that European entrepreneurs often say to me is that they just want an answer real fast. And a lot of the American VCs will just, give you a pretty fast answer. You don't think so, Max? Well, go on then. Disagree with me. But that's what I hear a lot. People just don't make decisions quickly.
All right, listen, I think it's a complete myth. US VCs have the same reluctance to say no than European VCs. The number one reason for that is it's shitty to say no. We appreciate everything you're doing with your startup. You're working incredibly hard. We have a lot of empathy with that process. And so a lot of people are reluctant to say no emotionally. And then rationally, we're reluctant to say no because we don't want to turn down your company. I mean, you might be a little too early now, but who knows? In 3 to 6 months, you might be great, right? So we stretch that time a little bit. Because for us, the option to wait and see, right, like Google real options theory, is just very valuable, right? So we take our time. And it's not always a bad thing, right? Internally, we have a relatively small fund. So one of the things that I communicate is that, one of our only advantages is speed in Europe. And it's true. If you make a decision within 4 weeks in Europe, you have a real advantage in the market. At the same time, I don't think it's a Europe-US kind of difference.
What are you going to say, Philippe?
Well, I would say that for having spent close to 10 years in the Valley, I do see that difference. But at Accel, I think most of the people, all the people in our team have spent a significant time in the Valley, and we're bringing Silicon Valley in Europe. So our way of conducting our investment process is very similar to what the US VC are doing, and we tend to be very fast. And I can't remember any process that would have lasted even close to 6 months. I think our processes, we usually get to a quick no, in which case, if it's not the right fit, we try to tell the entrepreneur what are the things that we want to see for it to be a better fit for us. We tend to give this feedback quickly. And then when we actually proceed, the investment is actually, the money is in the bank, typically within 3 months from the start of the process, which is very much in line with what's happening in the US. So, but I've seen especially, local firm that, some example in France of firms that are kind of dragging the process for a very long time, but that's not the way that we're doing it.
Let's talk about some of the exit opportunities in Europe. Who was in? You were in Playfish. Yeah, you guys were in Playfish.
Yes.
Exited to EA Games a few years ago. So there are big exit opportunities, especially amongst the gaming platforms now. To some extent, social games. Wooga is an interesting social. It's kind of like the Zynga for Europe to some extent. People have described it like that. What are the exit opportunities at the moment in Europe? I saw recently there was a discussion about reviving the Neumarkt in Germany. Oh, I see you were smiling and joking about that. What did you think about that? Is it embarrassing to talk about the Neumarkt?
Germans are very afraid always about everything, about Euro crisis, US crisis, and about losing money on stock exchanges. So I think it's more than 10 years ago that started and died, and there's no renewal. I think in general we have got an exit problem. It's hard to exit companies, not the blockbuster super companies, and not the very small, let's say, 10 to 20 million that publishers may buy. But in the middle size, in the average range of a 50 million transaction, it's difficult to sell companies. So, and therefore, people think about creating a new exit market. And I think the second reason why people talk about it is that there's a lack of competition. What you described, at least in Germany, that's true. And there is even more a lack of competition when it got later stage. So there's enough seed capital around, there is not enough Series A capital around, and the later it gets, the harder it gets. Some of the families are pushing in, and this is why I think this Neumarkt theory goes up. In general, on gaming, well, if you look at the benchmarks, today they are valued pretty at the low end of companies. Why? Because acquirers tend to buy on an EBITDA multiple of, let's say, 5 to something, because it's so questionable if they can generate one game after the other. And if you can't prove that, then you just are paid for, well, the EBIT cash out potential of the existing game portfolio. And you have to come across that bridge.
I mean, I suppose the knockout companies in that space at the moment are companies like Wooga, Supercell, Rovio, sorry? Wargaming, yeah. So there are some like real blockbuster companies, but there are lots of games out there that just aren't, that interesting. Or, what about the possibility for US acquisition in Europe? US companies buying European. Marcin.
It is absolutely a viable option. So we see. Actually, the situation is different depending on the region in Europe. I would say that in emerging markets, including Russia, a number of M&A options emerged that were not available not only a couple of years ago. So I think that M&A is generally the primary exit route every venture capital investor assumes. And historically in emerging markets, it was the typical assumption was foreign acquisition. The interesting thing is that in the last couple of years, for example, in Russia, we see a growing number of acquisitions by local companies. And specifically in terms of foreign acquisitions, I think that U.S. companies are very active acquirers. If you take a look at top U.S. corporations, each of them is technically doing an acquisition every quarter, and many of those acquisitions is taking place in Europe. Not so many in emerging parts of Europe yet, but I believe it will be increasing.
What are some of the things that you're going to see from this part of the world, Central Eastern Europe, Ukraine, Russia? What are the companies that are going to be most interesting coming out of here at the moment? Are they going to be high technology? Is it kind of a two-speed situation where a lot of existing business models are basically being rolled out? Some of them are clones, some of them aren't. There's a lot of low-hanging fruit, isn't there, to be had in a market like this?
Absolutely. I would say that this region, a couple of unique elements. Number one, there's a lot of software talent all over Central Eastern Europe. So we see a lot of software companies that are developing very unique solutions and expanding internationally. So software is definitely a strength here. Being more specific, I would say that there is a lot of innovations around SMB business that is happening here. So
Around what, sorry?
Small and medium businesses.
SME.
So generally, if you take a look at mature markets, the share of SMB business is relatively small. So actually, larger markets are generally concentrating either on enterprise or consumer, and SMB is often kind of not getting enough attention in terms of new innovations. In Central Eastern Europe, share of SMEs is enormous as a share of economy or total employment. It's much larger than probably in any other region globally. And we see a lot of products, services, and software that is specifically built to satisfy SMB needs.
Max, if we could pass the mic down. Max, one of the big, interesting... if you guys share this one, you guys share that one. One of the big companies that raised money just recently out of Berlin, number 4, I think it's called number 4, isn't it? Marco Burrows?
Yeah, I don't know anything about that company.
Well, but just as an example, to pick up on what Marcin was saying, SME companies, so electronic point of sale. This is why we see so many companies are doing Square clones now, Pay11.
Yeah, it's a shitty business. No, it is. It's a terrible business.
Shitty business. Square's doing quite well out of it, isn't it?
Not really. It's a difficult. I'm not quite sure if anyone's interested in it. It's a terminal replacement sale, and the good merchants buy real terminals, right? And so your other merchants have to grow to a certain size so that you make money on. What are we now at in Europe with the iZettle sum up competition? I think we're at 1.95, right? So that's like a net margin of 90 basis points or something.
There's so many companies in
It's
this
not very
space.
interesting.
Juice,
yeah, there are a lot of companies because it sounds cool. But what I really want is like proper mobile payment, like stored card mobile payment. Forget NFC, not going to happen anytime soon, right? And I'm going to eat those words in about 2.5, 3 years.
No, I think.
But I think mobile, like stored card mobile payments, would be an awesome business. I'd happily look at one of those.
A lot of people do. We've actually said this on TechCrunch that we just don't think NFC is going to happen.
Yeah, the problem is these things never happen, right? Like 2005 was the year of mobile, right? And then 2006 was the year of mobile, and then 2007 was finally the year of mobile, and no one realized, right? And now we're looking back, and suddenly mobile is everything, right? So let's talk. What do these people want to know? Like, because I'm looking at the audience, and everyone's kind of like, it's like bankers on stage. I hate that.
Well, we'll do one more question. We'll do some Q&A in a second, guys. So get your questions, get your little brain cells going. We'll have some questions. I can run out with the microphone, do the talk show host thing, and we can hear if you want to know something, because we've got some investors on stage, and you've got questions. You want to know the answer. Let's get something out of them. But let me bring up one final question for you guys. Interestingly, just recently we saw AngelList produce this thing called syndicates. So the AngelList syndicate, where you can build a syndicate based on one individual. So, for instance, Kevin Rose, the founder of Dig, has now got an AngelList syndicate. He reckons he can raise $2 million, like just right off the bat, just because he's got that many people following him on AngelList. Kind of sounds like a house of cards potentially, but I don't know. What do you guys think about that? Did you hear about the AngelList syndicate thing? And what do you think about that model going forward? This kind of virtual syndicate network that just appears almost from nowhere. What do you think, Philippe?
Well, I think when you're raising money, I think you should have two objectives in mind. The one objective, which is I need to get the money in the bank, because otherwise there is no game. And for that, I think you should, do whatever it takes to get the money. And if that means sponsored lists like this, I think that's fine. I think the second thing, though, is if you have the luxury of being able to choose where the money is coming from, then you should really think about, what value can it get from that money. And sometimes if you have, big name out there that is driving, these people have been very successful, but that means also that they are in very high demand. And so the real question is, what is your personal relationship with the person? How much time is that person really ready to commit to you? And so what I would ask you to think about, if you can, again, if you have this luxury, is really think, who is going to help me? What are they going to bring to me? And I think that's more important than, having a brand name which may bring some PR, but it's not going to bring you any help. So that's one thing I would think about.
Any other views?
So, in general, if the person that is leading the syndicate is really involved and engaged and taking care, I think this is perfect, this model, because you have a prominent brand name, he for sure has a network. The question is just, does he like to work on this deal? And can he provide maybe in follow-on rounds additional capital if needed, if things go longer? Or if it's just a first initial investment and he cannot follow on, which could be problematic for an entrepreneur. But in general, I think this is much more a threat for the VC industry rather than this crowdfunding or tax efficiency thing, because at the end, I don't believe what we are doing is so difficult. If you look at our rate of returns on our they are so low, so that I think you must professionalize more by, for example, these super angels, rather than putting state credits on top of private individuals doing investments.
So you think the syndicate model has a real threat to traditional VC?
I think it's a good option for an entrepreneur, and if I would be a good entrepreneur and have a good idea and can raise capital from these kind of people, I would really consider it, rather than taking money from a middle successful average venture investor.
Right. Max, do you have a view? Oh, Marcin?
Yeah, one aspect that you know, I believe it's highly disruptive. It can be very disruptive to VC model. And it seems to combine the value add element, you know, with an angel, you know, leading the round, and it's making it easier for many angels to do investments that they wouldn't be able to fund themselves. So it can be potentially very disruptive. You know, one aspect that can be risky to this model long term is, you know, is the fact that people who are going to provide this funding, they do not necessarily appreciate the risk they are taking. So VCs understand the risk related to VC investments. Actually, you know, in order to be successful in this space, you need to make multiple bets. You need to have portfolio approach. So for people, you know, who just perceive this as a way to get extra returns, you know, it may end up with disappointment. So technically, a lot of people who kind of trust the model and passively invest to support those investments and get their fingers burned, it may be an unpleasant surprise that may kind of, you know, put you know, this model at risk because of lack of trust. So it can be technically another version of Neumarkt, yeah.
Get your questions ready, but go ahead, Max. Yes.
So if you take anything away from this discussion, is AngelList is good for you. You don't have critical mass in your market yet because you don't have enough angels, you don't have enough funds looking at this stuff. Doesn't matter. Put your company on AngelList. Just do it to support that network, because transparency in this market is good for the entrepreneur, right? So that's why, and I love that. I mean, you know, I actually like syndicates because I'm kind of thinking I can make 20% off of my LPs and I can make 20% off of some people I kind of pile into the round. So I love the idea of leading syndicates in Europe. We're nowhere close to that at the moment. But AngelList is fundamentally a good thing for this market. So please use it.
And it's free, basically. You can just, now can I swap microphones with you? And use that one. And if you have any questions put up your hand. 1, 2, 3, one at the back. Anyone else got any questions? Okay, start thinking, and I'll come up and I'll move this direction. I'll tell you what. No, I'll move that direction. I'll come to you next. Sorry, guys. I know. You know. Right. Let's go over here. I bet this isn't really in the script, is it? But anyway, who gives a shit? Right, can you say your name, the name of your company, and your question?
All right. Hi, my name is Laurent. I actually co-founded a company here called Viewdle, and we sold it last year to Google. We did fundraising here. I know some people here. We did fundraising in 2008, and we were not able to attract investors in Europe, not in Ukraine, not in Luxembourg, not in London. We met all you guys. It didn't work. We only did the Series A in Silicon Valley, and that's where we actually put the company. What do we have to change in Ukraine for you guys to consider an investment here? In Series A or early stage? What is it that you're looking for that obviously we're not giving to you for an investment?
Yeah, go ahead, guys.
I think times are changing, right? So I remember when you guys were fundraising, and it was '08. It was a difficult time, right? Because the world had melted, and I think it's gotten better. I think there's more institutional capital available in this geography. But I agree. It's always going to be it's going to be more difficult to raise in Europe in the foreseeable future. So if you have a small tech team and you can up and move to the US and you're not able to raise in Europe, it's not a bad thing to do, right? And I think you guys did it absolutely right. I think most of the worries about your model were to do with market size, to be honest.
Any other answers?
Yeah, I would say that your problem is quite...
I mean, personally, I don't think, if I look at the investment we have made in Eastern Europe, there are companies like Prezi, which were very similar. We had, a tech team here, and then we helped them expand in the US. So, this is the type of model that we found. I think, we haven't invested in a company in Kiev so far, but it's due to the fact that, we invest in one probably out of 100 companies that we see. And we haven't seen that many companies coming out of Kiev, even though in the past couple of years this number is increasing, which is great. And that's why I'm here with another people in my team, so Luciana, Alexandru. So I hope you can meet her as well. And we are looking at a lot of deals. We have seen some very interesting things today. And we hope that in the near future we're going to make an investment from Ukraine.
Great, thanks. I don't know how we're doing on time. We've got 5 minutes more? 5 minutes? 5, 10? What? Okay. Okay, next up, I'm going to move from this angle over here. Could you say who you are and what your company is, and then you can ask a question, sir.
Hi, I'm Sven from Game Founders. It's a startup accelerator for gaming vertical, the first in Europe. We see a deal flow from 50 countries globally, and we invested globally. And my question is, do you see more deal flow in gaming? We see it in early stage. Do you see it in later stage? More deal flow in gaming, and yeah, that's the question.
Gaming. Any answers?
I think, let's say, we saw more deal flow in earlier days than we see today in gaming. So there is still deal flow coming in, but because it's just a more and more difficult industry for the established ones, for the Zyngas and so on. There is not so much, or there's less interest from investors, and this causes that there's not so much deal flow as it was in earlier days. But there are still things coming up.
Philippe.
I think on our side, we have been investing in a lot of gaming companies. I think what we've been looking at in gaming is inflection points in the evolution of the industry. So, for example, when we saw the emergence of social gaming, we invested in Playfish, right, which is next generation in that sense. And we looked at the emergence of online game for kids. We invested in Mind Candy. Then we saw games on the iPhone. We invested in Rovio. Then we saw game coming to the tablets, we invested in Supercell. And I think for us, it is a question about what is the next thing, after tablets. What is going to come after? And so far, we have seen a lot of companies that are again doing games on phone, doing games on tablet, doing games on social games on Facebook. But what's next? I think that's what we want to see.
I think also the bar is so much higher now. The fact that you have to have a game so much better designed, so much better gameplay now. It's a very, very high bar to. You were disagreeing, Max. Go on. You're always disagreeing with me. Go on then. What's your answer?
So one of the worst decisions I ever made was not investing in Wooga, right? Because I knew Mark Pincus and he'd founded Zynga, and I kind of thought Zynga was a good idea. And then I tried to do Playfish at Atlas, and then Index and Accel won it. And then so I was kind of like, and then this guy Jens Wegemann comes from Berlin. He's never built a game before, and he's like, I'm going to do this social gaming company. And I tell him, this thing is over, right? Like, honestly, there's like 15 other companies doing it. There's no way you're going to. So I mean, that company is kicking butt, and it's not just kicking butt on its original platform. The social gaming is kicking butt on mobile. If you look at something like King.com, that company's been reinvented like 3.5 times ever since launch, right? Like Mind Candy, that was an alternate reality game that had nothing to do with what they ended up doing, which is a phenomenal kids game, right? And more than that, like an entertainment brand for kids, right? So I agree, the tablet first kind of thing with Supercell is cool. I think there's so much more you can do on tablet. There's so much more you can do on the phone. So I honestly think, in terms of game mechanics, we haven't even close to explored what the touch interface is kind of capable of. So I think there's a ton of stuff we can do. We're super hot on gaming. We think it's one of the few consumer internet, consumer mobile kind of binary investment opportunities that are left. It's obviously hard to do, and if you want to do a big round in the beginning, you need to invest in kind of people with a track record. And there's maybe 1 to 2 investments there a year in Europe. But putting 100 to 200K into a company, that is a big question mark. We had the opportunity to invest in Mojang in the very beginning because we know those guys well. They were doing something in a Java applet in the browser called Minecraft, right? And our partnership looked at it and said, this is never going to work. It looks terrible, right? So one thing we've learned in gaming is like, don't try to predict the future. If you kind of like the people and it's fun to play, like run with it.
Yeah, that Minecraft thing, I mean, I don't think it's going to turn off. Those guys are just all squares. I mean, it's crazy, right? Okay, we actually got some more questions. We're going to try and squeeze this in real fast, let's say. We'll get a question and a question and a question. We'll get these, can you come here? Yeah, quickly.
Okay, my name is Kirill. We are building infrastructure fulfillment B2B companies. The question to all the speakers, the question about valuation is sort of important kind of thing. And what is your favorite valuation approach? Like DCF, comparable multiples, or multiples to the invested capital? Yeah. Please.
How do you value? Valuations.
I think in early stage it's pretty simple. You've got maybe a 2 to 3 million valuation for a first-time entrepreneur, and then it goes to 5 to 6 for somebody who has done it again or in a very hot area. And if some of the super angel come up, then it's not so sophisticated as you think. You can answer differently.
That sounded like an MBA question or something.
You can answer differently. You come from the exit perspective, that you come from the $1 billion approach, and then you calculate it down. But honestly, from our side, it's a pretty.
Any other answers?
Well, I would say that what is really important is, is there willingness on both sides to work together? I mean, that's how I look at things. And at the end of the day, I mean, there is no, we don't have a big machine at Accel where you put all the information about the company, you have one magic number saying, well, this is, the valuation, and we're not going to invest at a valuation different from that. I think at the end of the day, we'll always think that the valuation is a bit high. The entrepreneur will always think that it's a bit low, and that's usually where a deal happens. Yeah. But the most important thing is there needs to be a willingness for both sides to work together.
Okay.
Usually, if there is, it works.
Very, very quickly, Marcin.
I would just say that DCF doesn't work for early stage.
Right.
So we don't use DCF for early stage.
Max?
All right, I'm going to let you in on a little secret. The #1 determinant of what your company is valued at in a venture round is how much money you raise. Because we always own the same thing. It's between 15 and 25%. right, is 20 to 25 in a Series A. So if you raise 2 million, you have one valuation. If you raise 3 million, you have a different valuation. If you can raise a bit more, that tends to increase your valuation.
Right, okay. I'm going to come to you last. This is second to last question. Quickly, very quickly, what's your question?
My question is regarding investments. Early angel investments are quite often made at a very bad valuation, like with an angel coming in with 100,000 euros and taking 50% of the company. Things like that happen. I'm from Scandinavia. Things like that happen quite a lot there, and I know things like that happen here also quite a lot. What's your point of view on that? I mean, is a startup screwed if that does something like that?
Well, I think it's not ideal, of course, and the reason why it's not ideal is because at the end of the day, you're going to need to raise a real venture round, and a venture firm is going to want 20% for the Series A, and then the Series B is going to be probably 20 to 15%, and Series A 10 to 15, and you'll take all that dilution along the way. And so if someone comes up owning 50%, then at the end of the day, the entrepreneurs owns very little. So when that happens, usually there is a new grant of options to the entrepreneur to basically raise the cap table. But again, I would say again what I said earlier. If you need the money, you have to get it, and if that's the only way to get it, that's the way. If you can avoid it, obviously it's better to take 20% dilution than 50.
I think Philippe's been far too diplomatic there. If an angel wants to take 50% of your company, you tell them to fuck off, okay? C-Camp, for instance, as an accelerator in London, takes typically between 6% and maybe 12 to 15%, but it depends, But they don't take 50%. I mean, because then there's no interest. It's completely uninteresting to a VC to get involved in a company that's already 50% owned by another investor. There's no way they can do any follow-on round. It's just simple as that. Tell them to fuck off. Right, last question. So who you are, could you say who you are, which company you're with, and your question, please. Thank you.
Hello, my name is Bernard. I'm the CEO and co-founder of Buzu, which is a social network for language learning. When talking to investors, we always asked about the future of our industry and megatrends and what's going to happen next in gaming, etc. So I would be really interested what you think about the future of the VC industry. What are the big trends in the next 5 to 10 years? Are you going to be disrupted by the angel lists? Is it that one day we find your term sheets online? Will it be that we send in an email and you all will be replaced by an algorithm and we get back an answer? How is the VC industry going to be in the 5 to 10 years from now?
Quick answer.
All right, so the very quick answer, 5 to 10 years, this industry is a little like the Catholic Church, right? We think in like decades, because our funds run for 10 years, right? So is much going to change in the next 5 years? I have one big hope for this industry, and to be honest, sometimes when questions get asked like this, it feels like the entrepreneurs and the VCs are not on the same side. We're on the same side in Europe, right? We need good returns so we can get more money so we can invest in your next company. So there's this is a virtuous circle that needs to happen. I have one big hope. There are about 20 billion plus valuation companies that are pre-IPO, pre-M&A over the next 24 to 36 months. And that includes stuff like Spotify and Wonga and Supercell and King and a bunch of companies. Very cool. Once those companies go public or sell, I think a lot of the slow-moving limited partners, those are our investors, are going to come back into the market and are going to look to deploy capital. I think that's a very, very healthy thing. I really desperately hope that's going to happen. So that's my number one big trend for Europe. I love AngelList. I love more transparency. I love more angels. But fact is, we have 2,000 to 3,000 companies being seed funded in Europe a year. We need more institutional capital, right? And I think our governments are realizing that. It'd be great if the private market realized that as well.
Very quickly.
Well, I think very quickly, just one comment of how the industry has evolved just in the past 5 years. I think company gets quicker, faster. I mean, you see companies like Supercell. This is a company. I mean, the fastest company growing in terms of revenue and profit in the history of Accel. Why? Because now today you have access to distribution networks that are global, didn't exist in the past. And I think this trend is going to continue. I think we'll see companies growing bigger and bigger and faster. And to support that, you will need people, investors who are ready to move faster and have a global network to be able to support these companies.
Right, ladies and gentlemen, thank you very much for listening to us. Please thank our panel. thank you very much for hosting us at IDCE. Have a good day. Thank you. Bye-bye.